With option trading, I have made 20 lakhs in just 5 days.
ऑप्शन ट्रेडिंग पैसे कमाने का सबसे आसान तरीका है और ये आप भी कर सकते हैं। हाँ, आप भी।
With just 5,000 rupees, I have made lakhs.
It's so simple. I'm also gonna put in 3 months of my saving into this. This is interesting. अरे यार, shit!
Okay, something was definitely wrong with the expectations of that guy. Do you know option trading is so popular and people think they can make a lot of money, but here are the stats. 9 out of 10 traders in the F&O segment actually made losses in FY22 and the average loss was 1.1 lakh rupees. And these are not some random stats. SEBI says it. And if you remove the profitable outliers, just 6% of all F&O traders individually made money and the average profit was just 3,400 rupees. 3,400 rupees was the average profit. What? So basically, very few people actually make money in options. So we'll talk about all the things that seem shiny about options. We'll talk about the good. We'll talk about the bad, because certainly the internet isn't telling you the truth. So let's get started. So before we understand why people lose money in option trading, let's quickly understand what derivatives are. If you already understand this, you can skip ahead. If you don't know what it is, we'll do a quick understanding of what and how they work. So just like you can buy and sell shares in the cash market, you can also trade in the derivatives market with futures and options. A derivative is exactly how the name sounds. You derive the prices from something else. Like the prices of curd and butter can be derived from the prices of milk. So if the prices of milk go up, of course the prices of curd and butter will also go up because that's the raw material needed to build this item. It's a derivative. Similarly, the derivative market is derived from an underlying, usually stocks and shares. So here's an official definition of an option contract. An options contract is a financial agreement that grants the buyer the right, but not the obligation, to buy or sell an underlying. The underlying could be a stock or a share or something else at a preset price within a given period. So an Infosys option contract derives its value from Infosys shares. And like that famous movie dialogue, "Kehna kya chahte ho?" Let's explain with a simple example. So let's imagine you want to buy a cycle. You know, the simple ting ting, the cycle. You go into a shop and he says, if you want to buy it, please pay me cash right now. You say, "Dekho sir, I don't have the money right now. But what I can do, I can give you 1,000 rupees upfront to block this particular cycle because I like this design. And in 10 days time, I will come and I'll pay the rest. And the cycle is 10,000 rupees. By paying the 1,000 rupees, let's call it the premium, you were able to block and say that I have the right to buy this cycle for 10,000 rupees within the next 10 days. Now notice, the cycle is the underlying, 10,000 rupees is the strike price or the price that you want to buy, and 10 days is the time limit or the expiry date within which you can complete your obligation. Now the reason that he paid 1,000 rupees upfront and not the entire 10,000 rupees is because he's a little unsure. He's a little unsure whether he'll actually ride the bicycle and he really needs it. He wants to think about it. And he's also unsure of the price. In fact, he's speculating that the price of this cycle may go up or down for multiple reasons. Now, two things can happen. You can either come before the 10 days, pay the rest and take the cycle, or you come back after 10 days. What do you think is going to happen? Do you think that the owner is going to sell you the cycle after deducting that 1,000 advance you gave to him? What's likely going to happen? You've lost that 1,000 rupees because you did not complete the contract. You said you'll come back in 10 days and buy the cycle, but you didn't. So he will not honor it and that 1,000 rupees is gone. Now, can someone force you to buy the cycle? No. You've bought the right. It's not an obligation. If you don't want to buy it, don't. But if you don't, then that 1,000 rupees, it's gone. Now, of course, options isn't that easy. There are other aspects to this as well. This particular example is a call option where you're saying that you want to buy this stock, or in this case, the cycle, within a particular time. In the stock market, you can do the opposite too. You can also buy a put option where you think the price of the underlying of the stock is going to fall. So now, Here's the thing, you have a bunch of variables here. First, you have direction, whether you think the price of the underlying is going to go up or down. Second, you have the token amount that you're paying for, that's the premium. This moves as well. Then you have the expiry date. This entire contract expires at a certain time in the future. By adding all these variables, the prediction of the prices becomes really tough, especially when it's within a time limit. This makes option trading really, really complicated and difficult. But despite this, option trading is on a rise. People love trading options because money can seem like it will come quickly, and it's just exciting. And that's the jut of the entire problem. In fact, people love options so much, 400 times more option contracts are traded than actual cash market. And if you look at this, you'll see people are trading options way more versus any other country. But why is this? Let me show you one thing which will blow your mind. This is Asian Paints. And I can see that Asian Paints has risen in this time by about 3%. If we had invested 1 lakh rupees, you would have made 3,000. This is how a normal investor would think about 3% as a return. But the same time frame, if someone had taken a call option, it would have gone up by 137%. Now you tell me, someone who's never traded in the market, who has no idea how the stock market works, has never invested, finds out that one stock went up 3% and the same stock in the derivatives market went up 137% in the same time period, which is what? 1 day. He'd think, let me start trading and figure out how options work. Let me make this example a little more exciting. This 137% and all sounds interesting, but in real cash, what does that mean? So in derivatives market, you can't just buy one share. You have to buy a certain number of shares. That minimum number of shares is called a lot. Now, I can see that Asian Paints is a minimum of 200 shares. But in the derivatives market, it's not trading at thousands of rupees like the cash market. It's actually trading at 29 rupees for this example. So 29 rupees multiplied by 200. You would have paid 5,800 rupees to make this one trade. And this 5,800 rupees would have given you a 137 profit. Theoretically, this is what beginners think. It's a low investment cost, and it seems like you can double your money very easily. So a small capital, lots of volatility, and in a small time frame, you can double your money. It feels paisa hi paisa hoga. And this is the second point. The barrier to entry is really low. If you look at any option contract that you're looking to buy, it costs 1 rupee, 10 rupees, 20 rupees, 30 rupees, and it feels like it's easy. Let's see if I can make 20%. Which comes to the third point, finfluencers. Sometimes these people mention specific products to make you transact in them. Sometimes they think it's a good idea, sometimes they get a commission through an affiliate link. But whatever the reason is, a lot of these people were also in options. And in options, the thumbnails were crazy. When you see a thumbnail like this which says 5 lakh rupees in 5 minutes, you might click because you're curious. You might watch a few minutes because it's entertaining. You might watch the next video because you really want to understand how he made 5 lakh rupees in 5 minutes, and if someone can actually do that, why aren't they rivaling Ambani? And then we have the advent of the internet. Over the last few years, opening an account with a broker has become really easy. Access has become really easy. So anyone who's not even read or seen this channel or read Varsity or done anything to understand how markets work can just trade. And that is the definition of gambling. And because of all of these reasons, we've gone from 7 lakh traders to 45 lakh traders in a really short period of time. And in fact, I can see here that over 85 billion option trades were placed in India. That's 83% of global option trades. Take a moment to realize how much that is. 80% of the number of option trades happen in India. That's a problem because I don't think most of these people understand how option works, and most of them are gambling. But you know what's the most interesting thing out of all these facts? It's this. 89% of option traders lose money. This is not me or our research team saying this. SEBI said this. So why do people lose money? Now, in this, I'll only explain about buying an option. We're not going to talk about writing an option or selling an option because it might get a little complicated because this video is for absolute beginners. So the first thing is limited time. Let's say we take two trades. One is where we buy a stock and let's see what happens to the stock. And second is we buy a call option. We are bullish on it in the option market. This stock didn't move at all for the next 3 days. Look at that. It's barely moved. Okay. This means whatever you invested is lagbhag the same. Let's look at our call options of the same underlying. Because the stock didn't move, well, the options also should not have moved, right? But as you can see, it's fallen more than 15%. Now you tell me, why did the option fall 15% if the market didn't move only? What happened? This is called theta or time decay. Basically, the option contract has an expiry date. And as you go closer and closer to the expiry day, the value becomes closer to zero. So this adds a new dimension. Not only do you have to predict the direction of the price, you also have to predict how fast it will go. You also have the option premium. Well, now you also have time. You have to predict when this will happen. It has to happen sooner. And predicting that is kind of difficult. The second reason is just plain lack of knowledge. There was this survey over here where the survey said 40% people enter FNO because they think they can double their money quicker. Now, when you start trading, you could lose money or make some money. So let me tell you some two interesting stories we found. Here's a story of one guy who started trading with a capital of 2 lakh rupees. And he says, you make a few wins, then you realize it's quick money. Then you go all in. And one day I lost 1 lakh rupees. Clearly, this person hadn't spent any time understanding how the option market works. He just went in to make some quick money, thought of it as gambling, and this is what happened. Another story on Reddit is even more interesting. He first made 5,000 rupees, then made 20,000 rupees in 5 minutes and thought, this is not that tough. I can figure it out. And eventually, he lost 59,000 rupees in just a few hours. And as soon as this happens, something interesting occurs in your brain. Your brain tells you and intellectualizes it, saying, if you spent a few minutes to earn money, you lost money, it's part of the game, you'll find a way to make back that loss and then get back in the game. And then you start trading a little more aggressively. This, my friends, is called revenge trading. You probably don't know this because you're not in the cycle, but anyone who has should tell their story in the comments. If you have lost money in FNO without understanding how it works, please tell us your story and let the 01 community understand what are the pitfalls and psychological tricks you tell your mind and lose cash for no reason. And I think all of this behavior turns into addiction, right? Revenge trading, I want to trade again, I'll find a new strategy, I watch YouTube videos, I do all these things and I'll feel like taking one more trade and it becomes, well, an addiction, and that's a problem. And we have the perfect story here as well. Here we can see that someone says, after losing 1.8 lakh in options, I told myself I'll stop, but I did it again. This is the definition of addiction. The fourth point is wrong influence. Imagine someone watching a YouTube video and then trading. I mean, ऐसे थोड़ी होता होगा, right? I mean, who watches YouTube videos and then starts trading? I mean, can you imagine someone taking a large portion of their salary and actually putting it to options? Of course, this is true, and that's why this is a point. Over here, we found this really interesting story of someone who bet half of his entire salary in option trading and lost it all. Here he says, the lessons I learned is that if something is too good to be true, it definitely is. And here it says 36% of option traders are under 30 and they have this FOMO of the market and they want to make that money quick. And we also know that 37% of people spend their trading capital after getting influenced by social media. The guys on the internet don't really care about your capital. They care about their own stuff. So don't listen to them. It's weird I'm saying this when I'm talking to you on a social media platform, but well, I'm de-influencing it. So 01 rocks. If you thought this was a nice episode, please say something in the comments. We're trying to make videos which appeal to a larger audience, which are simply understood without getting too technical. So we thought there should be some series de-influencing all of it. So let me know what other episodes we can do. See you in the next one. And if someone can actually do that, why aren't they rivaling Ambani? Right? Why? Anyway, let me explain with a simple answer. Let me explain with a simple तुझे लगा मैं गलत बोल दिया? I was doing it for effect.